works for everybody. So welcome everybody. I'm Brandon Mueller, the president of Seubert Associates. I hope everybody is safe and healthy and keeping their sanity through this as much as you can. COVID-19 is something that very few of us expected. This has hit each and every one of us, both in our business and personal life. We understand it's been a challenge to navigate through the chaos. There's a ton of lack of clarity and unknown of really how long this is potentially going to last. So while it's unexpected, it's something that we are living in and trying to navigate through. We at Seubert are staying optimistic. We're hoping that this is temporary, but everything is speculative at this point. So I definitely feel for each and one of you and the challenges that this has presented. So with that being said, we are trying to be as proactive as possible in a reactive environment. The amount of information that is being sent over to you and to us is overwhelming. It seems to constantly change. What was sent yesterday could be completely wrong or different today. And then a perfect example of that is the PPP loan and the amount of information that went out about that. And we're still seeing it change every day as we get further into it. So almost daily, it seems, and weekly that the parameters around that have changed. Another big topic is what we're talking about today, which is the business interruption or the business income insurance. This is an extremely hot topic and very controversial right now between the insurance carriers and the insureds. As the stay-at-home order was enacted, most businesses, regardless if they were shut down, are still able to be open because they were considered life-sustaining, suffered and still are suffering a revenue loss. So while most of you are carrying business interruption insurance, it's become clear through either discussion and or denial of claims that COVID-19 was not covered by the policy, either due to the direct physical damage to the insured property, or the wording of the bacteria virus exclusion. So we continue to see headlines around the legislative pressure on the carriers to cover these claims, and also both individual and class action lawsuits against the carriers on their no coverage stance. Interestingly enough, we saw an article that came out today discussing the Supreme Court issuing, basically the Supreme Court issuing an order that could potentially negate carrier stance that COVID-19 did not result in direct physical loss of insured property. So basically they're saying with the carriers taking that stance, it's not covered because there's no direct physical damage. The Supreme Court is saying you can't use that. So we'll see how this falls out. So what really we're looking to do with all the lack of clarity around this whole issue, what we're really looking to do today is maybe bring a little bit more clarity around it. The coverage, specifically what you as an insured can ultimately be doing, how to handle this. The real goal today we want to get through is discuss the purpose of the business interruption coverage, discuss the fundamentals around policy terms and provisions, discuss the different industry, judicial, and legislative trends regarding COVID-19 and the business interruption claims, discuss what type of information supports a business interruption claim, and what you should be doing to take first steps around reporting a claim. So to help with all this, Chris is on the phone. I mentioned his name earlier. Chris is with Houston Harbaugh. I think most of everybody on this phone call has heard of them and or you do some work with them. Well-respected firm in the tri-state area that focuses on insurance coverage, bad faith law, business litigation, estate and succession planning, intellectual property litigation, employment and labor, a host of different kind of laws. Very well known and very well respected in the tri-state area. On top of this, they've been awarded multiple awards, including best law firms in Pittsburgh. In particular, today we'll be Chris Jacobs from their firm will be engaged with us. And his specific focus is on the areas of insurance and bad faith, insurance coverage, and commercial litigation. In speaking with Chris last week, he is highly on top of this. He was referencing a bunch of class action lawsuits, a bunch of other individual lawsuits as he continues to track and monitor what those rulings are and how it's going to pertain to each individual policy holder going forward. And really, that's what he's going to help with the discussions today. So what I'm going to ask is, I think Jenna can control, and if she can, I apologize. Again, this is our first very large Zoom meeting that we're doing. So in the essence of the webinar and keeping the integrity of it, if you're not on mute already, if you could put it on mute, that would be greatly appreciated. Additionally, we do encourage questions. So if there are questions, please use the chat function to be able to ask. We will get it, and Jenna can read it, and one of us will respond based off of who we think's best to respond. And again, my heart does go out to everybody. This is a challenging time. It's an unknown time. Not a lot of clarity on a lot of issues as it pertains not to just business income, but just life in general, from a personal and from a business standpoint. So hopefully we can help at least in this individual topic today. And we see this going forward. What we're going to try to do is a town hall around this, or kind of a series around this on every Monday around 11:30. We believe next week we're going to talk about the workers' comp, how that applies, what's going on there from a law standpoint, legislator standpoint. There's a lot of changing things around that coverage as well. And D&O the following week, and we have some other topics maybe outside of specific to business insurance that we're going to be covering the following Mondays after that, but we will get out of the series to everybody. So with that being said, Chris, you have the floor. We appreciate it, and thank you, everybody.
Well, thank you, Brandon. There I am. So I thank you for the introduction. I also wanted to thank Seubert for the opportunity to take on this this series and to start today with the business interruption topic, which, as you mentioned, is really the hot topic that that has really overtaken the insurance coverage world over the last couple of weeks. I also want to thank all of the attendees for taking time to tune in and join into the meeting today. I know that everybody's busy, so I appreciate that time. We're not all as busy as we would like to be, at the moment, or as we once were prior to the COVID-19 crisis hitting us a couple of weeks ago or a month ago. At this point, I think everyone would agree that there's not a business that hasn't been affected in terms of its operations in some way, shape, or form because of the COVID crisis. And I think that's what really brings us here today, is to look, what are our options? What should we be considering as it relates to the potential insurance implications and the availability of insurance coverage relative to the suspension or cessation of business operations. As Brandon mentioned, Houston Harbaugh does a lot of things. I don't do all of that. I'm really the insurance guy, I'd say. And more specifically, I usually represent the insurance carriers in coverage disputes. So I think I can offer a realistic and unfortunately maybe a sobering perspective as to where the insurance industry might come down on these issues, as Brandon indicated. the industry generally is taking the position that these business interruption policies and its coverage terms really don't extend to these types of losses, and we're going to get into that in a moment. That's I wanted to mention that because it's a snapshot of how we're looking at as an industry the potential of availability of insurance coverage. Really, as Brandon mentioned, we're not looking into providing a deep academic discussion regarding insurance policy provisions. There's very few of us on the call that like to engage in that types of discussions. It might actually just be me, as far as I know, and maybe Brandon. But we would like to at least kind of give you a practical overview of what do these policies look like, and what are some of the factual issues that businesses should consider when looking at submitting a claim for business interruption coverage. As Brandon mentioned, this has been in the news. It's been reported in the newspapers. There is, reports of the potential legislation in Pennsylvania regarding coverage, or at least the legislature weighing in on whether these insurance contracts should provide coverage. Even the president at some point mused about the availability of insurance coverage. So it's certainly out there. So what we want to do is really look at, what are the critical policy terms? That's not something that's being reported or looked at. So what should you be aware of in your own insurance policies, and how might those terms match up to the experience that we're all undertaking right now in terms of our business operations. I'm going to try to share my screen here as well to it does not appear to be it. We might have to do this the old-fashioned way and not do a slideshow, but hopefully everybody can see my PowerPoint presentation rather than have to look at me. You could at least look at my my text here and follow along. The issue of where I'd want to start at least is to look at what, as Brandon introduced, the purpose of business interruption insurance coverage in the first instance. It really is designed to cover losses sustained during a period of time when the insured can't continue its normal business operations. It applies when, simply stated, the insured is unable to actually use the business property. It's designed to do for the business what businesses would have done for itself had the loss not incurred. So the important point of that is it's really supposed to be kind of a safety net for the period of time that the business premises is unusable. It seeks to prevent the devastation of the business, the economic and financial expectations of the insured due to circumstances outside of the insured's control. So on its face, what we're dealing with now with the virus certainly fits within that scope. Importantly, it's a narrow grant of coverage. It only protects against the consequences of a loss, not actual damage to the property itself. And we'll talk about that in somewhat additional detail. But it is a narrow insuring agreement in that it really does focus on this loss of business income itself. The insuring agreement refers to business income coverage, provides that the insured will pay for actual loss of business income. It's designed to really look at hard numbers, hard losses, not speculative losses, not consequential losses that could be traced back to the loss of business income, but the actual loss of income. That income needs to be sustained due to the necessary suspension of the insured's operations during a period of restoration. These are all defined terms, as you can see in quotes. What I'm what I've done is I've looked at the standard coverage forms from various insurers and try to put it together in a sort of a generic presentation for everyone today. Every policy is slightly different, but these are the basic and fundamental terms.
So, Chris, I apologize on interrupting.
Sure.
But I originally, when you first started, saw the slides, and now I just see a window screen. I think everybody
okay.
is too.
Okay. Let's see what I can do here. Sorry for
Your mouse. We definitely see your mouse moving.
Okay. So you can just see like a blue screen. Is that right?
Yep. There we go.
How about this? All right.
Got it.
Well, as you can see, I'm not the most technologically advanced person, as I'm proving, but I did figure out how to use 2 monitors here at my dining room table, and so now I'm on my second monitor, and that seems to work. So
Go ahead. Thanks.
So thanks for the heads up, and if that happens again, certainly raise your hand, or virtually, like as you did. So in any event, as I mentioned, these are all defined terms, but I've kind of called together in a generic way all of the forms that I've been able to look at from various insurers to put together what's really the most uniform and fundamental terms that's common to all of these policies. So the period of restoration, for example, is in every policy, there's a time element to the coverage. And as you might expect, it starts at a certain point and ends when the business operations of the insured resume. In most instances, the period of restoration begins after a certain time period, usually 72 hours. I kind of call that a time deductible. It's not going to kick in right away. In the instance of these COVID-19 sort of losses, I don't know that that's really going to be terribly relevant, because we're certainly there's been a significant amount of time where operations have been suspended, but that's something to certainly keep in mind. Importantly, suspension is also a defined term, and it noticeably it's not shutdown. Suspension is generally defined as either a slowdown of operations or a shutdown. So a business doesn't have to be completely shut down in order to be eligible for business interruption coverage. There simply has to be also a slowdown of operations that results in a loss of income. As Brandon mentioned, the linchpin of all of these coverage disputes are really going to come down to, in my estimation, direct loss of damage or property. Every business interruption coverage form that I've looked at requires this, and it does state that the suspension of the operations must be caused by that direct physical loss or damage to property. In normal circumstances, in cases I've seen, you might have fire damage, smoke damage, water damage. Those are clearly direct physical losses to property, and that's usually not an issue. Here we have contamination by an invisible substance. We have this virus out there, and I'll be publishing an article probably later this week, regarding how Pennsylvania law will likely or very well may likely treat this. There's not a lot out there. I'm not going to get into that today, but there is a suggestion in the law that to the extent that sources unnoticeable by the naked eye, is what the courts say, to the extent that those sources render insured property useless or uninhabitable, that loss of use may constitute direct physical loss or damage to property. It may not, and that's going to be the big question mark. The cases that I've seen, as you might imagine, asbestos fibers attaching to insured property, you can't see it, but it might render it useless or dangerous or uninhabitable. The main case that in Pennsylvania that I've come across, it's rather old, but there was E. coli bacteria located in a well on the insured property. This was a homeowner's policy, but it dealt with this issue. The court there found that that could constitute direct loss to the property because it was unusable, it was uninhabitable by the residents. I can see similar arguments possibly being made by policyholders in this upcoming litigation. So that's something we'll keep tabs on and see how that develops. One thing I also wanted to mention, the main grant of coverage is this business income coverage, but there's also a corollary in all of these policies called extra expense coverage. If you recall, a couple moments ago, I said that it's a narrow grant of coverage and relates to actual loss of business income. Well, policies do also contemplate that businesses are going to incur some extra expenses in dealing with the loss of income. And so there is a kind of a secondary pathway of coverage that's also narrow, but does exist, and that's called extra expense coverage. That's going to include costs to minimize or avoid the suspension by continuing operations at either the insured location itself, finding a temporary location or a replacement location. And those costs may include costs incurred in relocating operations, equipping a new location, things of that nature. So something to keep in mind. It also relates to the extent that you can't continue your operations, anything that the insured business incurs in trying to at least minimize that that suspension. The next point that I want to make here is directly from insurance policies. So the language is a bit tortured, but I can explain to you what I think it's endeavoring to state. Because the natural question is, well, what if I repair or replace insured property? Is that covered? I think in the case of these, the COVID-19 loss claims, the question will be if I undertake to remediate or clean the property in some way, will that extra expense be covered? It does. The policies do say that extra expense coverage will extend to costs incurred to repair or replace property, but only to the extent that that repair or replacement actually reduces the amount of loss that would otherwise would have been payable under the coverage form. So that's some tortured insurance language for you, but what I think it means is to the extent that the insured can demonstrate that the repair, replacement, remediation, et cetera, actually results in reducing the business income loss, which is what the coverage form is designed to cover, then to the extent that that's characterized that way and can be demonstrated that that reduced the amount of business income loss, then perhaps there might be coverage for that under the extra expense coverage. Another policy term that's implicated is the civil authority grant of coverage. On its face, it looks like this should definitely be covered because it covers actual loss of business income or extra expense caused by action of civil authority, meaning government action, at the state, local, or federal level that prohibits access to the insured location. So we look at that just in and of itself in a vacuum, and it looks like it should directly apply. Most businesses can't access their insured location because of these closure orders instituted by the governor. However, looking at more closely, a word of caution. First of all, these civil authority coverage provisions vary a lot among the different policies, so you'll have to look at that, your particular coverage form. But they do uniformly require that a covered cause of loss or a covered peril cause damage to property other than property at the insured location. Again, that's a confusing insurance term, so I tried to think of this morning what would be a good real world kind of illustration of what that means, because what it's really getting at is the civil authority action has to relate to property damage somewhere else, not at the business location itself. If we all remember the Liberty Bridge closure from a couple of years ago, a contractor did something, set fire to the bridge, it made it structurally unsound for a while, and it got shut down. If you imagine that a business location the only access to that location would be on the Liberty Bridge somewhere, or the main access to it was Liberty Bridge. That was shut down, and it caused a loss of income for that business, either completely there wasn't any access, or it was difficult to gain access to it. Then in that instance, maybe the civil authority coverage might apply, because in that instance, PennDOT would have shut down the bridge, causing an inability to access the insured property. And most of those, most policies require that the insured location be within a certain geographic proximity to that other damaged property. In my illustration, the Liberty Bridge, let's say, you have to be within maybe 1 or 5 miles of the Liberty Bridge to get coverage to attach. With COVID-19, again, it looks on its face like this grant of coverage would apply, because there is a denial of access as a result of these closure orders. But again, the question then is the pushback is going to be, where's the other property? It doesn't really match up necessarily, as clean as folks would like it. So that's going to be a challenge, and that's definitely going to be a fight. Brandon mentioned the virus exclusion. Covered cause of loss under these all-risk policies, which most business policies have, is defined as a fortuitous cause or event that's not otherwise excluded under the policy. Well, check your policy if you're looking at a business interruption claim, because it very well may contain a virus exclusion. I can tell you, I've looked at thousands of policies, I think, over the years. Whenever a policy contained a virus exclusion, I can assure you that I've scrolled through it, or in the old days, flipped through it, because it never really came into play. Now I've read it, I've looked at it, and it pretty clearly states that we will not pay for loss or damage caused by or resulting from any virus. It looks like it's going to definitely apply, or at least the insurance industry will certainly make that case. Just as a bit of background, I took a look into the history of the form. ISO came out with a circular, which is its kind of explanation for its basis for the form. ISO is the main organization that comes out with these standard forms. And so the virus exclusion language that I've quoted here is from that ISO form. When they submitted their virus exclusion to state regulators in July 2006, it expressly identified the SARS virus. There is the closest analogy we have is that SARS outbreak from that time period. If you look at the literature, the virus from which COVID-19 mutated is SARS. I think the official name actually is 2 SARS-CoV-19. The ARS part of that acronym is acute respiratory syndrome. So because COVID is part of SARS, and because SARS really was the impetus for this virus exclusion, I think the courts may be apt to find that COVID-19 is a type of virus that the exclusion is designed to address. So if you have a virus exclusion, that's going to be certainly an additional, if not the primary obstacle to a pathway to coverage, in addition to what was already talked about concerning direct physical loss and the like. Getting down to some practical issues, how is business income defined in these policies? Typically, it requires consideration of 2 components: the net income that would have been earned by the insured or incurred, and continuing operating expenses. So simply stated, it's your very basic balance sheet information. I think it would make sense to look at historical data over years during the specific time period at issue to demonstrate what typical business income a business would have earned but for the cessation or the suspension of the operations occasioned by the virus. Net income is generally measured by considering the net profit or loss before income taxes. I also want to note that some, but not all policies also include payroll as a component of the continuing operating expenses that's called for Why is that important? Well, again, kind of uncharted territory, as Brandon mentioned. Many businesses have received these PPP loans. That may very well be part of the calculus as to how that's factored into calculating business income loss to the extent that there would be coverage, and you get down to trying to figure out exactly what the business income loss will look like for the purposes of coverage. Did you receive that loan, and then how is that going to be factored in? One important note that I can't stress enough is that business income coverage is often supplemented via industry-specific endorsements, and that endeavors to customize the basic definition of business income that I set forth above with respect to a particular type of business enterprise. If you're a normal person, not somebody like me, you probably haven't sat down and really looked and read through insurance policies. The reason I mentioned that is the way almost every insurance policy is constructed is that it's made up of these basic forms, ISO forms, or what have you from a certain organization, and then it's customized via endorsements, with either changing of definitions or the inclusion of certain types of coverage or types of exclusions. Business interruption coverage policies usually have some sort of endorsement that will change the definition of how the specific business is to look at business income or define business income and figure it out. I'll use my own law firm as an example. I took a look at our policy. As you might imagine, it has this basic definition of business income that I set forth above, but it also requires us to take into account billable hours and things of that nature, because obviously that's how we make our money. So every industry likely has a certain endorsement that applies to that type of business, how that business is calculated, whether it be sales, whether it be manufacturing, et cetera. That's something to be important to look at up front when thinking about making a claim. How is this going to be translated for me in particular? We talked about industry, judicial, legislative trends up front. I'm not going to spend too much time on it, but as Brandon indicated, a lot of claim denials. So far, I've yet to see actually any kind of reporting that a carrier thus far has actually recognized the availability of coverage for these types of losses. Also, as Brandon mentioned, there's a lot of putative class actions throughout the country that are being started by different sectors, restaurants, other types of business. Restaurants seem to be the hardest hit and have started a lot of these lawsuits. There's also a proposed federal multi-district litigation panel actually in the Eastern District of Pennsylvania. What that means is that litigants are basically trying to say, look, we have all of these claims. Let's consolidate all of the federal claims into one court so we can have some uniform decisions. I'm a little skeptical as to whether A, class action certification is going to be extended, and B, whether it's going to go to a multi-district litigation panel, only because we're dealing with different business sectors, different facts and circumstances, and slightly different policies here and there, that it's going to be hard to, I think, come up with some uniform decisions. But that remains to be seen whether that's going to be streamlined or not. In all of the complaints that I've been looking at, the allegations are very light on the actual terms and provisions that would provide arguably a pathway to coverage. They seem to be ignoring the direct physical loss and civil authority terms that we discussed earlier, because as we said, there are some obstacles to coverage. So I think they're going to try to place the onus on the insurance companies as litigants to demonstrate why coverage would not be available. I can tell you that almost uniformly, all of these lawsuits are being initiated by insureds, not the insurance companies, prospectively. I saw a stat last week at some point there were 60 lawsuits filed. 59 of them were by policyholders. One of them was by an insurance company, which was incidentally Travelers against the Garagos law firm. If you remember Mark Garagos from the O.J. Simpson days, and he's often on the news. His law firm submitted a claim, and Travelers denied and went to federal court in California seeking a declaration to confirm their denial. Lastly, if you want to follow the legislation, Brandon mentioned that Pennsylvania is one of the jurisdictions where the legislature is considering passing some laws requiring business income coverage to extend to these losses. Senate Bill 1114, House Bill 2372 are those. I don't really want to get into the details of them other than to make you aware of that. I wouldn't literally bank on the passage of that legislation. First of all, it's just in committee. We all know how long it takes for a bill to become a law. What's interesting to me is that Pennsylvania is one of the jurisdictions that's trying to indicate that carriers will be required to cover these losses, and then they can go back to a fund to be managed by the insurance department to recoup some of those payouts, either in full, but probably not, more likely a percentage. Of course, they don't say where that fund is going to come from because of the legislature, and they have the luxury of just saying that, and they'll figure it out later. I wouldn't put it past them to, if they were to do something like that, to impose some sort of business income tax, ironically, to businesses to pay that on the back end. But we're a long way from seeing that. I'm skeptical, honestly, of the constitutionality of these types of pieces of legislation. The U.S. Constitution, as I quoted there, does have the contracts or impairments clause that says no state shall pass any law impairing the obligation of contracts. Well, these are insurance contracts, and the terms are what they are, so I can easily see constitutional challenges to this Pennsylvania legislation and legislation from other states. So again, something to keep in mind, and we'll monitor that, and I'll provide you updates, as we move forward with this series. What types of supporting information should we be considering in connection with the submission for these business interruption claims? Just as a quick list that I put together, it's certainly not exhaustive at all, but some things to consider. Identifying the date of the suspension of the business operations and when they resumed in full. That will be the period of restoration that I talked about earlier. Of course, it's hard to pinpoint exactly when you're going to be resumed in full in terms of your operations, but there is a requirement that those guideposts are established for the purposes of identifying the time element portion of the coverage. I mentioned before historical data, historical billing and payroll data over the last couple of years during this time period that you could use to juxtapose, where you were pre-virus versus post-virus. I put overtime pay as well. This might fall in easily to an extra expense type of coverage that I mentioned before. Did a business have to pay some overtime or additional pay to employees in order to try to minimize the suspension of the business operations or keep things going? That could easily, or at least potentially, fall into extra expense coverage to the extent the coverage is available. Some industry specific items. Did the business lose any sales or particular orders? Again, not speculation, but actual lost sales that were in the works that would have been consummated, but for the crisis with the virus, or any orders that might have been out there. Were any sales or orders actually delayed during the period of suspension that you would have realized that you didn't realize because of the inability to use the insured premises? In the manufacturing sector, were there, how many units were not manufactured or assembled that otherwise would have been assembled? Were there any client appointments that would have you know, translated into some sort of business income that couldn't occur because you couldn't use your business facilities. Those types of things are things to think about and try to you know, to record. So you know, if and when a claim is made, that data might be available to provide to the insurer in connection with the claim. The next item I put to asterisk here, extra expenses to remediate and replace the property. As I indicated before, it's not really a designed for the actual, you know, to cover the actual expenses with the replacement of a property, but to the extent there's remediation costs that you can demonstrate that that were incurred that minimized the loss of business income, then with that spin on it, there at least could be a chance that those expenses could be covered to some degree. And similarly, if a business did incur expenses to relocate its operations or continue, you know, in some measure, those extra expenses might fall into the extra expense coverage bucket. Lastly, then, you know, what should you do? I think is the main question at this point. You know, I think we've talked about how the industry has really responded uniformly by telegraphing that, you know, to the extent that these claims are going to come in, there's probably not going to be coverage. There's probably going to be a coverage denial. That doesn't mean that the insured should have necessarily an adversarial relationship right off the bat with the insurance company. The goal would be to partner with the insurer and, you know, see, you know, if a legitimate and genuine claim can be submitted, if there is an opportunity to work with the insurer to provide some coverage, even if it's not full coverage, you know, something that would be, you know, certainly helpful and available under the policy. Right now, it might be appropriate for businesses to simply put in a notice of a potential claim through the broker, you know, to the insurer, just to let them know that this is something you're contemplating and might be coming down the pike. It's important, at least in my opinion, to confirm that a business interruption claim is actually ripe. I think a lot of these businesses went out right away, submitted claims, but didn't necessarily have the data to back up that a business income loss was actually sustained. I think if the claim is developed, if it is demonstrated that there is a genuine calculation here of lost business income, it can go a long way to appealing to an insurer to provide coverage rather than sort of just, you know, in a reactive kind of stance, submit a claim and then get a quick denial without any real evidence backing it up. So I think it's important to wait, see how the law is developing from a judicial standpoint, from a legislative standpoint, and then to see how the industry is reacting to this from a public policy standpoint. Develop your claim, and then when the time is right, you know, demonstrate the actual loss that has been sustained, and then put your sworn proof of loss into the insurer if and when it's appropriate. It is a sworn proof of loss, so that's why I would caution actually demonstrating that you have something to back up the business income loss rather than you know, something hypothetical. That's all I have. I think you know, we had some technical difficulties in getting started, so thank you for your patience with that. So I don't want to go on any longer. If you just can't get enough of this stuff and you want to hear things in real time, you know, as Brandon mentioned, I do post a lot. You can find me on LinkedIn. If you like getting your news in 280 characters or less, follow me on Twitter, and you can find some of these case law updates and developments in the law through there. But you know, as Brandon mentioned, I'd much rather hear questions and have a discussion rather than listen to myself drone on. So if anybody does have any questions, certainly bring them up. We can address them, or offline, if you want to send us something, we can certainly respond and talk, talk separately. So again, thank you for your time. Thank you for your patience. And I'll open up the floor to Brandon.
So Chris, one of the questions that we got in, I was just responding to as you were talking, is that we are paying rent in an office downtown that we cannot occupy by the governor's orders to stay home. Our business can operate remotely. Is there a claim under BI for this loss? I'll tell you what I've typed and going to send, and then if you could critique it. So I said there'd be potential coverage for this under civil authority. However, that civil authority would have to occur due to a covered peril. The policy additionally would have to be free of virus exclusion. Right now, carriers are denying coverage for any BIEE claim because of 1, the virus exclusion, 2, no direct physical loss, 3, not a covered peril. Obviously, what we're talking about today, all of this could change based off the lawsuits and legislation that's going forward. So that's what we're going to continue to track and monitor that.
No, I think that's good. That's hard to critique, but so I would leave it as it is, and I would simply add that, the lost rent is certainly a loss. That would be part of your continued operating expenses. So it would go into the calculus of identifying business income. But you're right, Brandon. I think that, as I indicated, the civil authority on its face appears to potentially apply, but for the reasons we discussed, I think that's going to be a challenge. I also think that just characterizing lost rent in and of itself and pinpointing that is a challenge because as a prerequisite or condition preceding to the coverage, you're going to need direct physical loss to the insured property. So you have to demonstrate that first in order to bake in lost rent as an ingredient to the business income. So, but that is an example of something that would be considered, but there's a number of steps that have to be accomplished before we would get there to a grant of coverage.
We have any other questions? Okay, so Chris, great job on this. We really appreciate it. Everybody that is on the call, I will make sure that we get Chris's information out to you. If you want to consult with him, you have further questions, particularly, obviously, you can always call and ask us. But if there's something that you feel you want to do based off of a response that you got from the carrier, I'd be more than happy to send you his contact information. Again, as I said, hopefully what we did today is accomplish the goal of basically helping you understand the coverage, helping you understand the stance that the carriers are taking, why they're taking that stance, and what potentially could change. I wish we had a crystal ball. I wish we could tell you how this is all going to play out. Unfortunately, as we know, unless legislators act quickly and swiftly and change the coverage, this will be held up in courts, and it potentially could take years to figure out. So one of the important things is that if you are suffering a loss and you feel that you're suffering a loss, to start to track and monitor that now, because we all know as we're 2, 3 years, 4 years down the road, and hopefully business is back to normal. Going back to that time frame and trying to recreate what your loss is potentially a whole heck of a lot harder than staying on top of it now. So again, I appreciate everybody joining today. We will be sending out another invite. It'll either be this afternoon or tomorrow morning. Next week, Monday, same time. We will be focusing. We'll have any kind of updates that we have from a business interruption standpoint. So there will be some storm clouds. There will be some discussions this week around what the PA Supreme Court just did. So I'm sure there will be some kind of update for next week. So we'll stay on top of that. and we'll dive into some workers' comp and really what around PA, maybe Ohio and West Virginia are doing as well. Just real quickly, PA, I know the legislators have put in to make COVID-19 compensable claim. So that is going to be decided on. I don't know when the exact vote is on that, but we'll get some details around it. Right now, carriers again are taking the stance, just like the flu. You get the flu, it's not a workers' comp claim. So we'll continue to watch how that plays out, and then we'll get the rest of the series lined up for you as well. So again, thank you, Chris. Do you have anything to add before we close?
No, I don't. Again, just thank you, Brandon. Thank you to Seubert for the opportunity. Really appreciate it, and look forward to continuing this ongoing discussion in the couple weeks to come.
Yeah. So hopefully we could be a little bit reactive and a little bit proactive in the reactive world, right? So thanks again, everybody. Have a great Monday, and we'll see you again next week.
Thank you.